Hi guys, this is Teacher Party. Oh, yeah, 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 yeah. I can see you're all excited about learning this subject. You love it, you love it. Ooh, where's the pom-poms? Where's the confetti? You guys are here. Yay! Wanting to get a distinctions accounting. Hmm. I see you maybe are not excited. You're thinking, Miguel, just get on with the subject. Just present. Okay, let's learn together. Accounting. Whether you're feeling up or down with this subject, let's just get you somewhere good in terms of your marks here. Guys, I want to do prepaid expenses because mostly, most conceptual framework questions, they will test something that that is lost between two translations. For example, like a prepaid expense. So you'll be so excited. Yay, I see this is insurance expense. And it's prepaid. Yeah? So usually theoretical conceptual framework questions, the theoretical questions, they will test the technicalities of something, uh, of an element becoming a particular element from what you really know. For example, stationery, you already know, now it's an expense. And then so the entry is debit expense, credit bank. But if it's prepaid, the entry is not limited to that. You see, the entry is more than that. So guys, what is a prepaid expense? The, a prepaid expense is a type of accounting entry that occurs when the company pays for goods and services in advance of receiving them. So the key trick here, guys, I highlighted in yellow, the company gives money over to the supplier, not supplier. Oh yeah, effectively, because if you buy stationery at P&A, essentially they're supplying you the goods and services. So not supply in terms of credit now, guys, but isn't a seller. So that's when you're giving money to, or you're paying for a service before it's even done to you by the supplier. Okay. And the prepaid expense, guys, always remember, prepaid expense, it will be recorded as an asset in the statement of financial position. If you're paying P&A, for example, you're paying P&A now as company X, you're paying them 10,000 for stationery you're going to buy in the next financial year. You've got power to go back to P&A and say, P&A, I want my money, change my mind, I found a cheaper stationery company, I'll pay them. Effectively, that 10,000 is still yours because they've not delivered a service. So that's why we recorded it as an asset. We still have the right to that money as a business. Okay? So what are the examples of prepaid expenses, guys? So it's rent. So if a company pays for rent expense, guys, if the company pays for rent expense in advance, it's going to be a prepaid expense. Just prepared this, guys, for you to put this in context. You see, this is a number line. We're looking at 2023. That one is 2024. So month 1 to month 12, 2023. This is our reporting period. And then let's go back to my favorite shop, Mr. Price. See, let's assume this is their financial year end as at 2020. Okay, so let's just assume, because I want this to be very simple, not work with prior year and current year. Let's just assume their financial year. Their financial year is Jan to December. Let's just assume, even though we know it's March, but I just want you to get the concept. Okay, so then you see Miss Price is selling clothes and all that. Then they pay for rent at Mall of Africa. at the beginning of the 5-year lease, they pay the rent for 3 years. We're still at the beginning of the 5-year lease. Bona, they pay for 3 years. They pay for 3 years. So the other years and months, they are prepaid. Let's use the same example. They're paying for a lease for the coming 18 months. They're paying for this lease in January. So by the end of December 2023, we would have expensed the rent expense attributable to month 1 up until month 12, which is January to December. The one now that is prepaid is from the 13th month up until the 18th month. So that one is prepaid because the reporting period is at a financial year that is coming, not at this current financial year. Remember, the mismatching principal income must be matched to the corresponding expenses. So in this case, awesome, ladies and gentlemen, we can't match an expense that has not been consumed or has not been incurred. We can't match it. We'll match it in that period when it's incurred or consumed. So same thing as insurance, I explained, Keyman Insurance, you usually get an invoice to pay from that date of invoice. Up until the next date of the invoice, so it's not really in line with the financial year or the reporting year. It's usually like if you take Keyman Insurance on month 7, they'll give you from this month, their year starts from this month bona up until 2024 month 6. Ne? You won't change your financial year end because you got insurance during the year. So be mindful, guys. Be vigilant of that. Okay. So the other months that will be consumed in the next financial year or incurred the next financial year, that will be recorded in that year. Okay, office supplies, I did explain. That. So, ladies and gentlemen, the key thing in understanding if an expense is prepaid or not prepaid, you must understand the definition of a financial year. It refers to the date in which the company year comes to a close, and its financial statements are prepared for that period that just ended. So if you see here, the period ends at March 12. So the moment someone pays something from whichever month, but it overlaps to the new financial year, then it poses a change now in the element definition that we might say that as much as insurance looks like an expense, but in this case, it has been paid for in advance by the reporting entity. So ladies and gentlemen, I hope you never, ever, ever struggle with prepaid expenses again. Bye.